Please familiarize yourself with our disclosure regarding forward-looking statements. I'll be making comments about the future based on certain assumptions that may differ from actual future outcomes. I want to start by introducing our mine rescue team who competed in the Sudbury District Mine Rescue competition last month. It's the second year that First Nickel has fielded a team for the competition, and they came in second, which is a fantastic result, competing against Vale, KGHM, and Glencore. The competition happened to be held just 3 days after the accident at the Lockerbie mine in the beginning of May, on May 6th, that claimed the lives of two men from Taurus Drilling. The team led that search and recovery effort that day, and then picked themselves back up to really represent First Nickel very well in the regional competition 3 days later. And I think that kind of determination really demonstrates the entire company's resolve after enduring, the worst type of hardship there is in mining, and it's the resolve to learn from what happened and improve ourselves going forward and persevere. The safety is the number one priority at First Nickel. So what I'm going to do is start with an overview of the past year, and then we'll move into the outlook for this year and going forward. The objectives for 2013 were firmly anchored in the company's strategy of growing to become a mid-tier mining company over the medium to long term. Our objectives were to, first of all, complete the successful first year of operations at the Lockerbie mine, to work to acquire additional assets for our portfolio, and to maintain a liquid financial position. The outcome was we achieved the production targets at Lockerbie, and we beat all of the cost targets for the year. We reviewed over 100 properties and confirmed that our major shareholders are firmly behind the company in terms of supporting acquisitions going forward. Those two major shareholders being Resource Capital Funds and Westface Capital. And we successfully addressed a very difficult nickel price environment, which I think everyone's forgotten about now because everything has sort of bounced back, and we'll get into that a little bit. But we had a real challenge on our hands beginning about a year ago with the nickel price situation. So in a nutshell, I think our operations performed very well, but the underlying market remained pretty challenging, both nickel price environment and the junior mining space in general. 2013 was our first full year at Lockerbie since putting the mine back into production. We achieved a production rate not seen at Lockerbie for the past 20 years, with 12.9 million pounds of contained nickel and 7.6 million pounds of contained copper. Our site operating costs were below plan for the year, as well as our cost per pound of producing nickel. So we actually overachieved on the cost side, meaning we spent less than the targeted range. And on the capex front, we were at the bottom end of our range for the year. So overall, we had a very successful year at Lockerbie, which I think really points to our ability to handle additional assets and grow the company going forward through acquisitions. So just a quick reorientation here of the Lockerbie mine. This is the long section view of the mine, and we're currently mining in the depth zone, which is this area here, from the 65.3 level to the 68 level. We've defined indicated resources down to the 7,000 foot level. We have inferred resources down to the 74,000 foot level, and we've got drilling in mineralization all the way down to the 7,800 foot level. So as you can see, Falconbridge would have started mining 20 years ago, 30 years ago, at the 1,000 foot level, and this ore body just keeps going. One of our current activities is analyzing how best to optimize the mine going forward. We're focused on the possibility of mining out the east zone, which is right here, and continuing down to the 69 level. I'll talk a little bit more about that on the next page. And of course, there's also opportunity going forward here in the Con West zone and the upper West zone. So a lot of opportunities going forward at Lockerbie, particularly considering what's happened to the nickel price over the last 6 months. So now we're looking just at the depth zone between the 65.3 level and the 6,900 foot level. What we've achieved over the past year, of course, this is a cross section. So you're looking east. The ore body is here, and the ramp infrastructure on this side of the page. In 2013, we advanced the ramp from the 66 level down to the 68 level. So all of this infrastructure was put in place, and we produced 250,000 tons of ore, and the majority of which came from the 68 level here in 2013. The grades of ore and copper were higher than our budgeted amounts, than our planned amounts in 2013. Looking at 2014, production is focused on the 68 and 67 levels. We are now currently mining the first stope on the 68 level, and this particular diagram shows the ramp being extended down to the 69.5 level, which is a piece of work we're analyzing at the current time, and we'll make a determination on that next phase of the mine plan sometime later this year. So that's Lockerbie. The other big story, other than Lockerbie in 2013, was the nickel price. And we started the year at $8 nickel, which is what we did our plans based upon, and we ended up down at about $6 by mid-year. And nickel traded in a range of $6 to $6.50 for the second half of the year. Many analysts were reporting that 30 to 40% of nickel mines in the world at that price level were underwater, couldn't cover their costs. So we had a real serious challenge. It really did present a threat to our business, and it significantly impacted our revenue and cash flow for the year. And it required a very quick response on our part to deal with this situation. So we pulled all of the levers that were available to us to really stay in business during this extremely difficult period of time. And they're all the things that you would plan on doing, but we had really put together a game plan, downside game plan ahead of time, and we started just working through these issues when we saw the lower nickel prices. So first was to reduce operating costs, second, reduce CapEx, third, reduce G&A, fourth, reduced exploration. We also renegotiated our ore purchase and sale agreement with Glencore. We successfully extended 2 union agreements during the year with our 2 unions at Lockerbie, and we increased our borrowings under our credit facility. So through these actions, our revenues were improved, primarily as a result of the renegotiation of the Glencore contract, and our costs were reduced, and we were able to cover the remaining shortfall through drawdowns on our credit facility. So with regard to the financial picture, there are really 2 key metrics from my perspective here in 2013. They're both highlighted in blue. First is cash flow from operations, where we used $2.2 million. There was a consumption of $2.2 million of cash flow during the year, which I think was a very good result based on the nickel price environment we were in. So effectively almost break even on an operating cash flow basis. However, we did incur a significant loss for the year, and that was really driven by the low nickel prices, but also the resulting impairment and write-down of our assets from that lower nickel price environment, and charges related to the extinguishment and renegotiation of our shareholder debt in 2013. Looking at the balance sheet, that we're facing two primary financial risks at this point in time. This is as of the end of March of 2014. At that point, we had $3.9 million of combined cash and available credit we could draw under our credit facility. So that's a pretty tight liquidity position to be in, and we'd really like to see the business begin to generate strong positive cash flow to address this situation going forward. And secondly, we have $39.6 million of shareholder facilities outstanding that mature in March of 2015, so next March. We are currently in discussions with our two shareholders regarding refinancing or extending these facilities prior to their maturity dates. So that's the balance sheet. From a stock price performance perspective, this is how we compare to a composite of 73 junior mining companies that First Nickel tracks. The junior mining companies being the blue line, FNI being the red line, and you can see that we underperformed the composite in the second half of last year as a result of the nickel price environment, and then outperformed the composite so far this year. We did give some of that performance back in the beginning of May, as you can see here, during the week that we had the accident at Lockerbie, and we announced our first quarter results. Looking now at 2014, we had initially expected to significantly exceed our 2013 production levels and achieve similar cost per pound. Incorporating our first quarter results, where we had production a little lower than planned and costs a little higher than planned, as well as the impact of the accident in May, we now expect to be at the lower end of the production range for the year, which would still exceed last year's production, and be at the higher end of the cost ranges here. There's some uncertainty on the outlook going forward because we don't yet know what changes may be required from the investigation that's continuing at Lockerbie, and how those changes might impact our production and costs going forward. And we expect to get a better handle on that over the next couple of months. We are benefiting, however, from higher nickel prices, and as you can see, since basically the beginning of March, nickel prices have really improved dramatically, primarily driven by Indonesia's ban on the export of unprocessed nickel ore. The ore from Indonesia had been the source of the majority of nickel pig iron production in China, and nickel pig iron is a substitute for stainless steel, traditional stainless steel. So the loss of feed from Indonesia and the resulting reduction in nickel pig iron production in China is expected to create a deficit in the supply of nickel globally sometime by roughly the end of this year. And the markets have begun to anticipate this supply-demand change in dynamic and drive up the nickel prices. So assuming the ban continues, we expect to see strong nickel price as the nickel inventories begin to get drawn down toward the end of the year. And of course, this is a great benefit to First Nickel. So looking really to wrap up our outlook for 2014, we have two basic sets of objectives that we intend to achieve. And these two objectives, again, underpin our strategy, which is to become a mid-tier base metal mining company going forward. So the first set of objectives really relates to creating as much value as possible with our current operating asset at Lockerbie through meeting our production and cost objectives and defining the next phase of development at Lockerbie, which I touched on earlier. So there are a number of options at Lockerbie to improve the value and increase the mine life. So that's number one in our core objectives. And secondly, to improve our balance sheet. And we want to do this through two simple ways. Number one is generate cash flow through our operations. And secondly, to address our debt, refinance our debt that is maturing next year, and eventually repay our debt, of course. Second objective relates to growth and growing the company, particularly through acquisitions. We want to diversify our single asset, single metal price concentration risk. We want to further leverage our operating capability and the experience the company has throughout the operations and the management team. And we want to create a valuable portfolio of mining assets going forward. So we've dedicated, quite a bit of effort to this pursuit of acquisitions over the past couple of years, which is really central to our strategy. We've literally looked at hundreds of properties and companies and assets, and have not yet found the right one. But we're optimistic that we will, and we're going to continue this very strong effort going forward. So I intend, and we intend, that 2014 will be a year in which we generate cash flow and further optimize the value of the Lockerbie mine, as well as advance our strategy through acquisition. So with that, I would be happy to take any questions.